back to watching Business Morning here on Channels Television, and we hear that cocoa farmers are in trouble at this time. Not good one for them. But let's have Adesola Sumoni, senior analyst with financial derivatives company, joins us from Reading in the United Kingdom now. Hi, Adesola. Good morning.
Hi, Ine. Good morning. Thank you for having me on the show.
Good to have you. So back here in Nigeria, while a lot of people are celebrating the FX policy, unification of rates and all of that, it's hurting the cocoa farmers. How?
Oh, thanks for that question. So it's I think it's a mixed bag, really. So like you said, the central bank has allowed the exchange rates to float to reflect, the market forces, and it's good news generally, but for cocoa farmers, I think it has a mixed effect. On one hand, it is kind of increasing the cost of their inputs, right? The inputs in the production process, cost of fertilizer, which is usually imported. It's increasing the cost of herbicides and pesticides, and that is kind of limiting their production, or it's essentially increasing their input costs. So that's one way in which this FX unification is affecting cocoa farmers. But on the other hand, it's actually quite positive, right? So from economics, we know that if the price of a commodity rises, it incentivizes suppliers to increase supply, right? So with the allowing the exchange rate to float, the local currency value, the naira value of exporting a ton of cocoa is higher. So essentially, the local currency price or the local currency value of exporting cocoa is higher, and this kind of incentivizes. We expect that's going to incentivize cocoa farmers to plant some more so that they can take advantage of higher export proceeds.
So on the one hand, they're gaining, and the other hand, they're spending more, but it should balance out. Which way is it balancing into?
And that's a very good question. I think the net effect would be determined by which one outweighs. Also, it will depend on the elasticity, right? So on the one hand, they have more bang for their buck. They have more naira revenue for every ton of cocoa that they export. On the other hand, we are seeing a rise in input costs. So I think it depends. It's very difficult to say at the moment. It depends on which one of these factors outweigh the other one.
All right. We also hear that Nigeria is amassing about $3 billion debts to traders because of oil swaps. Help us understand that.
So the idea in this oil swaps is called DSDP, which is simply direct sales, direct purchase agreement between the NNPC and a consortium of oil traders and oil majors. And the idea is this: the NNPC allows them to give them some crude oil essentially, and these oil majors or these oil traders supply imports the equivalent value of PMS into the country. So that's essentially the agreement, and that agreement has been on since I think 2016. But however, since we are seeing issues where Nigeria is not able to fulfill some of its obligations in terms of crude oil production. We've seen quite a sharp decline in crude oil production in Nigeria. Even Nigeria is not able to meet its OPEC production quota due to oil theft, illegal mining, a force majeure, and also some attacks on oil infrastructure. In addition to that, we're also seeing higher oil prices. When Russia invaded Ukraine, and up until now, oil prices jumped and they've remained quite elevated. So those factors put together, I think they increased Nigeria's debt to these oil majors. But now with the new policy of removing the fuel subsidy, I think with the reform that's coming on the oil market, I think this DSDP is also going to go. So the what is happening now, news from NNPC shows that the monopoly of the NNPC in terms of importing PMS is going to be disbanded. Now private companies would be allowed to also import PMS. I think this is also a part of the plan to finally what's the word now? Erase or remove the burden of subsidy from the government.
the private, players enter that space and we'll have more supply. But you did mention Russia, and we know that this weekend was a turbulent one for them. And we see, obviously, as a major exporter of wheat, it affected the price of wheat. Wheat is up about 2%.
Indeed. So, I mean, thankfully it was resolved, right? Otherwise, prices of Russia-based or Russia-focused commodities would have gone through the roof. Even though the issue, the political issue was kind of resolved, there are still concerns that it might have knock-on effects. For example, the Black Sea trade agreement, right, which is up for renewal in mid-July, there are concerns that it may not be renewed. Essentially, that Black Sea trade agreement allows Ukraine to export grains from Russia, from the Black Sea ports, in spite of the war going on between Russia and Ukraine. So with what happened in Russia over the weekend, there are some concerns about the renewal of that agreement. We hope that it's going to be extended, or the agreement is going to be renewed, because if it's not renewed, then it's going to have significant implications for the price of wheat globally, given that Russia is the largest exporter of wheat globally, and also Ukraine is one of the largest exporters. So if that deal is not renewed, or if there are concerns about infighting in Russia that then affects the export of grains from Russia, I think that's going to have significant implications for Russia-focused commodities.
Have to brace up for that, Adesola, because even now that the grain deal is not yet expired, Russia, activities on the Black Sea have not been allowed freely, paperwork and all indirect ways, because Russia has given some conditions that have not been met, and they are saying it looks most likely that the deal will not be renewed. So I guess the world should brace up for not very good days for wheat and some of those major exports from Russia.
Indeed. Hopefully, I think all hands are on deck to make sure that the deal is renewed, because if that does not happen, I think it's going to take the world back. It's going to just essentially take us back, particularly for developing countries who depend on importing staple foods from Russia. I think that's going to have big implications for them. It's going to have big implications for global poverty. It's going to have significant implications for food security. So I think it's even for Russia's revenue. Ukraine and Russia's revenue, right? Yeah. It's going to have big implications for all of that. Even global economy is slowing down because of tightening financial conditions and high interest rates globally. So I think it's going to have big implications on the global economy.
All right. So another commodity on the news is sugar. The futures up. What's driving that?
Two main factors in it. Number one is the weaker dollar. If you look at the dollar, it's weakened, I think, 0.18% week to date against a basket of other currencies. And usually, when the dollar weakens against a basket of other currencies, then commodities that are denominated in US dollars are then cheaper to holders of these other currencies. So that's one factor. But the biggest factor, I think, is this El Nino weather condition, right? So we are seeing the El Nino weather condition, essentially, it manifests in two different ways. It could manifest in excessive rainfall or in drought. So in Brazil, for example, it manifests as high rainfall. Meanwhile, in India, it manifests as drought. And these are some of the largest producers of sugar globally. So with that, there are concerns that this may affect This may affect sugar production in these countries, and that would cause prices to move up quite substantially. The last time we had this was around 2015-2016 marketing year, where we had this El Nino weather phenomenon, and prices of many of these commodities, both even in Africa, we have El Nino in Africa, right, as well as in South Asia, the price of these commodities reached record highs. And at the moment, with what we are having now, I think we are likely to go back to seeing record level price of sugar again.
Wow, and that affects a whole lot of things. A lot of things, you know, have sugar as one of their ingredients. But thank you so much for your time this morning, Adesola Sumoni. Dr. Adesola Sumoni, Senior Analyst in Financial Derivatives. Forgive me, I'll get used to it. Enjoy the rest of your day.
And you.